Hi guys, today we're looking at the month ahead. All the trading pairs, obviously we've just finished the month end, and we're now looking for long-term trade setups for the month of December. We're going to go through the indices as they're the best to be looking at for planning all your trading pairs, i.e. pound dollar, pound yen, pound Swiss franc, dollar yen, dollar CAD, etc. What we're going to look at first then is the Indice, the dollar index. Everything we're looking at is on the month view, and obviously we all know that the dollar has been just gradually gaining strength all year. It just doesn't seem to be letting up. It seems to be quite relentless. But if we look at this monthly candlestick view, we can look at a potential head and shoulders pattern. Here's our first shoulder, here's our head, here's our second shoulder, and this would be our neckline. And potentially on this pattern we will be looking for the breakdown on the dollar itself. Now if we zoom in and have a closer look at the dollar, we can see obviously this year that the dollar's been going up nice and steady. It's hit here with a good hammer, a good rejection, signifying a turning point in the market. We had a hammer prior, and the market bounced off this level strongly, which we would say is the neckline in line with the shoulders, and we had a good decline in October. November, the dollar started building up strength, but as we can see, we got halfway and we couldn't get any more strength. So this potentially could be the turning point in the dollar to move to the downside. And in an ideal world, we'd like to see the dollar just move down for the next 12 months. Make everyone's life easy, trading all the dollar pairs. But in reality, what we need to see is a break of this rising trend line, and as we know on our breakouts, we're looking for a break, return, touch to test, and then our fall. So that is the dollar that we're looking at. The next market we shall look at will be the ACSI, or the Australian dollar. Now the Australian dollar has obviously been going the opposite, and it's been going in a downward trend for some time now. However, if we zoom in, we can see clearly here's our downtrend, and yet again we had a good reversal signal, a hammer here, and then a strong move in the market, and it closed just above that wick, it looks like. And then last month, November, the market pulled right the way back, but we haven't closed below and we haven't broken this hammer. So it looks like this could be our turning point in the market for the Australian dollar to start gaining some strength. So a good trade to look out for would be the Australian dollar, US dollar, for potential long-term buy. This could be a good turning point here we need to keep an eye on. If we start seeing some strength building in Australian dollar, then we could be looking for longs on Australian dollar versus the US dollar, and that could be a good 3 to 6 month long-term trade. The next market we are going to review will be the BIXI, which, as you all know, is the British pound, and here is the pound. Again, with Brexit looming and general election, etc., etc., we've seen the pound break down this year, rally up, and further break down. We had an indecision, and then a good strong candle up, rejected halfway through the month, it looked like, and then all the way back down to then see the pound gain strength. Now, we need to keep an eye on here at this point, because this looks like a hammer forming for a turn in the market. So we need to see how the market opens, and it could go one of either ways. Again, I think what we may see is a pullback to around this level, especially if the Conservatives get in and they get the majority vote. I think that we shall see the pound retrace, and then a good strong move up. If we do see the move up, here's our area we need to watch for. If we break this area on the left, then all we can see is the pound breaking through, a pullback, and then an upwards movement, and this will be the target round here. So we need to see how the month starts with the pound. I think we shall see hesitation in the market for the next 5 to 10 days, waiting to see what the general election brings. But then we would like to be buyers down here, wait for the market to pull back, and then long-term buy. So if you're looking at something like the pound dollar, pound yen, then wait for the pullback, and then hopefully Conservatives get in, get the majority, and the market will believe things are going to happen, and money will start pouring back into the marketplace. The next market we shall review will be the CADUSD, which is the Canadian dollar. Now, the Canadian dollar, we've been watching this for some time, if you guys have been following us, and the Canadian dollar had some good PMI news out this week, and it looks like we might start seeing some strength coming to the market now. We can see here, basically, it's zigzagging up into this rising trend line, came back down, retested, and now we'd like to see the push up. Again, we need to keep an eye here to see where the market opens, but ideally we'd like to see the market open strong on the Canadian dollar with a move to the upside, which if you're trading the Canadian dollar, US dollar, then that would be the buy. If you're trading the dollar CAD, then obviously we'll be short in the market. Next market we shall review will be the XE, which is the euro. Not much to say here. The euro's just been declining. A hammer at the bottom here, good reversal signal. Twice we've had a reversal signal, and twice we've had two long wick rejections, trying to move to the upside. But October we had a strong candle move, closed above this wick. November we saw the market move slightly up and then pull back. But if we look to the left, the market has basically pulled back in line with the body here and rejected. So we could start seeing some momentum going to the upside. We don't really trade the euro, but the euro makes 58% roughly of the Dixie. So if we start seeing the euro gain strength, then we need to keep close attention to the dollar, because the dollar might start weakening then. So let's just keep an eye on that one. We shall now look at the CFD, which is the Swiss franc. Swiss franc just looks basically to be going sideways. We've had a lot of rejection candles here. The market is trying to move higher, but every time it does, it's just constantly rejecting. We can see all the way along this level we've had rejection, and again down at this level we've had some rejection in the past, and the market's been bouncing. So we need to keep an eye on the open of the month, see where the market starts heading. But at the moment there's no clear signal. It just looks to be a sideways market. Next market we shall review will be the Indice, which is the Japanese yen. Obviously, with all these trade deals with the Americans, well, Trump basically has caused the Japanese yen to be undecided quite a lot. We can see that with these doji candles. We saw in October a strong doji, a further doji here. We saw this hammer as a signal to change trend direction, which the market did. We had a good strong move up. Obviously, we rejected off at this level here and pulled back down. And the market didn't know what to do though, so we formed this doji, and then the market decided to move to the downside. And we closed below this key level on this wick here. So we may start seeing breakdown. We need to see what happens. We might see slight breakdown and then a move up to continue this upwards trend. We're sitting on the sidelines on this one purely because the trade deal and impeachment and Brexit and everything else that's looming, we just don't know what's going to happen with the yen. We all know the yen is a bit of a fictitious market anyway. If it starts getting into trouble, the government there will just pour some more money in or make more people poorer. Finally, we shall look at the Indice, which is the New Zealand dollar. We can see here we had our breakdown. It actually looks a bit like an Elliott wave theory. Okay, wave 1, 2, 3, 4. This could be 5 here. Hammer, change direction, good strong move to the upside. We closed high on that level, opened up, market moved back down that month, only to halfway, moved back up. It's like a dragonfly, a doji here. So I would like to see this market open up slightly higher than the body, and then a good move to the upside, going past this bit of confluence here, and then we can see a strong move to the upside. Finally, what is interesting is if we put an overlay on all the indices on the market on the screen, we can see a clear direction with all the markets themselves. So without saying, we can see all the indices are basically been declining this year, barring one, which is no surprise, is the dollar. So we could see the medium level here. Okay, if we start seeing this dollar decline around here, then we would like to start seeing all the other indices, all the 7 others, start moving up to the upside. And if next year the dollar does start declining, then this would be the convergence divergence, where everyone would be piling their sells in, shorting the dollar against all the major pairs: dollar pound, dollar CAD, dollar Swiss franc, dollar New Zealand, dollar yen, dollar Australian dollar. So as an overview, it's like a heat map. You can see all the indices have been moving down, but it looks like they're all starting to slowly gain strength in their own terms, and we need to keep an eye on this dollar. If it breaks below this rising uptrend off our head and shoulders, then it would be good positions on all our other trades. Well, hopefully this has helped, and moving forward, prior to making any trades this month, you can have a quick check on the indices, give it a couple of days, see which direction they're moving in. If they look to be on the turn to the upside, then look at their corresponding pairs to see what they're doing, i.e. if the Indice index is starting to fall, and we see the BIXI, the pound sterling, start to rise, then we know a good long would be pound dollar. And likewise, if the dollar index is falling and the Canadian dollar index is gaining strength, then we could have a good short on the dollar CAD. Any questions or comments, just let us know. Cheers.